Getting, getting. Today is February 2nd. Brian here from quantlabsnet.com. Going to talk about what's been happening with the latest development. We know gold crashed, silver crashed. Um, how do we respond to that? Um, right now, what it really comes down to is what I predicted in my last stream is that everything is going to go highly volatile, unpredictable, and probably quite possibly where investing, trading is going to be next to impossible over the short to most likely long term, the way the markets are looking. So, in this, I'm going to talk about news the last, since Friday, uh, again, February 2nd, 2026. Um, the general options and futures plan for the day you could use. I've generated this again on this morning. If you go, let me just show you my screen and all that fun stuff. So if you go into my um, post here on my blog, quantlabsnet.com, just look for this article here. Strategic Landscape of February 2026 Comprehensive Analysis of Futures and Options Opportunities. Now, I'm making this public just to show the capabilities of all this. And you download this zip file. What you'll get is a HTML file of the plan that you can use as part of your short-term and long-term trading. So what we're talking about is this. So what's happening here is that we're able to generate news, as I've shown in the last few videos, to show you um, a variety of trading opportunities across futures and options. This is why I say futures and options is the number one asset class to trade in, not just for unlimited profitability on each strategy you come up with, combined with futures and options, but more importantly, is to protect your downside, even in a highly volatile environment. So you can see here we've got it spanned out across precious metals, energy, currencies, equity, and compare all. So this is the highlights right here, and this is how detailed this is. So this is the very first panel you can get access to, and this is just a self-contained HTML file you can download at the link I provided. You get the drivers, you get the time horizon, and more specifically on how to play out this trade, along with the important portfolio metrics, including your projected return and your win ratio. On top of that, being able to calculate a tolerable max drawdown on this type of trade, along with everybody wants a Sharpe ratio and potentially even a Sortino ratio for their trading projections. Okay. So I'm going to show you, we're going to take this one step farther, looking at actual Python scripts and Streamlit apps and be able to look at that with both a walk forward and a back test that's generated because of AI. All of this I'm showing you again is 100% generated by AI. But here's the first set of trades. So we've had the crash in silver. We can do a put spread volatility capture. Max drawdown 18%, win ratio 72%, looking pretty good. High risk trade. Okay. So here's what's involved. Not going to go into it because you can download the details. We also have here the Japanese yen risk reversal, carry trade unwind if they don't move ahead with the threat of Bank of Japan raising interest rates. So you could build a trading opportunity there. Again, another response to the gold crash, being able to sell if gold continues to fall, and be able to generate 22%, 28% return over 30 days for this gold cash secure put selling. We also got here natural gas volatility if the warm weather kicks in early, so we can trade against that environment as well. Higher risk, as you can see here, high risk, and there's a measurement of each and every one of them. Medium risk as well. Oh, not only that, but we can also trade U.S. Canadian dollar bull call spread on a CME Canadian dollar futures options. And basically, what we're involving here: vertical spreads, directional, and defined risk. Projected return not as high, but the drawdown is lower. as a risk. Sortino and the Sharpe ratio is pretty tolerable. 6 to 10 week time period. Okay, the thing here is that you'll notice that the analysis doesn't go as deep as you'd want to. So here we've got our last trade uh, mentioned here, the NYMEX WTI Brent option. This is a put spot selling on an out of the money max drawdown at 14%, projected at 22%. Decent ratio. Again, here this is a medium risk strategy. So here you get the risk assessment. As I said, also it doesn't stop there. We can measure out the um, the opportunities here based around these trades using automated back testing and walk forward. So let me show you some of these scripts here, and everyone's going to go, "Where do I get it?" Well, get it in my Quant Elite membership. Again, you can get it here. I'm not going to show you exactly because the price will most likely shock you. But here, if you go under plans, under more plans at quantlabsnet.com, you can learn more there. And as I said before, if you want to get our free C++ HFT book, click on Learn and you'll get that. You can download your ebook there too. You can always try out our quant analytics as well. I have been posting some of these trades in this section. It's completely redone. We'll just say focusing on futures and options, and now moving into, as I said, the unpredictable, high volatile environment that we're entering into. So coming back to the Python here, so I've got here, I've developed with AI 5 separate Streamlit apps. In here, I've also got the latest data here, the CSV data, hourly data. We've also got here text files on README for each of these Python Streamlit apps. So the one I will tell you that looks best using the uh, descriptions that I've talked about is silver. Okay. So this one is looking the best one. And I'm going to show you what. Everything else is not looking great. Again, these are built around events, one time events, trading opportunities, which is if they don't happen, the risk is there. But this is your best looking app here. So we've got here silver, COMEX. I could set this up to live trade as it is. I could just run it through the AI again to work with my server that I created the last few weeks in C Sharp. I've talked about that enough. Now, this is hourly data. So I can run this back test. Each and every one of these apps, all I care about is a back test. I don't care about running it live, but just to show you that it's quite possible. Let me pull up my file here. Um, So just navigate to it. You're going to see the amount of source code I've been generating over the last year. It's immense. And all of that's in my Quant Elite. So in here, let me just pull up today, February 2nd, and we're now using silver. So I've got here 2 silver, uh, the regular silver, uh, a G6 contract, and the mini as well. But let's go with the standard contract. It's gonna do the back test now. It's pretty quick. Um, so let's see here. Blah, 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 blah. So now I guess there's a button in here somewhere. I'll run the back test. Let's see here, back testing. So it's now running the back test. But it's pretty quick. Yeah, right there. So that should launch it. Let me just see here if it's processing. Yeah, it's processing right now. So it's running the back test. Quite a bit of data. But as I said earlier, all I really care about is the back test results to show me the risk using the current data. And the one right now, I'm just showing you the best one so far. So in here, you can see here the equity curve really has been flat for quite a while. Um, and you can see here the drawdown's been pretty high back in 2022 and 23, but it's virtually no drawdown at all on this type of trade. So here we get a typical trade record. If we were to apply this strategy in the historical data that we're running. So as I said, we can also look at the walk forward as well. Let's do that. So it's going to use the past data assess the walk forward with this built-in strategy I've described here. So let me pull, well, let's pull this up here. So here's the returns here. So the returns are not the greatest on a walk forward based upon the hourly data I sent over. Average return 0.8%, average sharp. Now I don't know if that's on per trade, um, but you know, as I said, that's the best looking analysis I've seen. Also, if I was to connect this to let's do live trading, I can measure live trading with depth of market, and so on and so forth. So this is the details of this strategy as is, what I fed it. So what we're doing here is we got a put call spread of volatility capture, applying the uh, implied volatility. If it's greater than 80%, sell the elevated volatility. It's using the difference between the Shanghai. You can get that data through Rhythmic with the COMEX data on the spread deviation and build out a potential mean reversion opportunity. Also, if the RSI is less than 25, you have an oversold entry zone. On top of that, this is where the institutional level stuff comes in. We have a term structure inversion, which means we can sell our option premium, and that's the opportunity there. So again, this is using what was stated in detail um, in this strategy here in the silver right here as the number one, ranked number one strategy among the 8 here. Okay. So again, it looks pretty good if you want to apply it. And technically, we could be ready to go to live trade it right now. The whole point of what I'm trying to show here is the rapid development in these market conditions because, as I said, it's going to be unpredictable. It's going to be high volatility, and I think we're going to enter a into a area of looking at general strategies for trading that they will no longer work because the markets are becoming so distorted. As I said, with the gold trade and the silver trade, the big drops. From what I'm understanding, a lot of that was manipulated by Chinese traders on Friday, and they were purposely coincided with the announcement of the new Fed chair. So it was like pre-planned, and that's what the accusation is, where Chinese traders took advantage of it and knew that they would have a huge impact on the COMEX market. So if you're going to have that type of trading environment moving forward, this is why it's really important to understand two things: that you take the course that I've talked about. This will go up in price very soon. Pretty well, today's the last day, to be honest. But the course I'm talking about is um, here. Um, and under courses, this one right here, it's very cheap, but it's going to go up much higher tomorrow, effectively, because of the value of this kind of course and the necessity that people will need to understand what's happening here. So, coming back to this, this is what drove that um, loss in gold and silver. Who knows what will be in the future? If it's going to be Chinese traders, if it's going to be the banks themselves, the U.S. banks, we just don't know, and that's going to be highly unpredictable. That's one example. So in here, as I said, we got 8 strategies. We got this Japanese yen risk reversal that you can trade with a carry trade unwind if the Bank of Japan may or may not do their intervention. We also have here the same impact on the trading loss on Friday with a gold cash secured put selling. So if that continues, we could initiate that right away. With the current setup I've got, if for instance, as I said, if natural gas decides to crash, we can have a trading opportunity there. If warm weather is announced, and obviously natural gas will collapse in the price. This next one I'm going to show you is the Canadian dollar on the bull call spread. This one seemed to be okay to trade as well. Again, based around um, the trading uh, view of what this gives right here. So again, right here, you can see here, this is a very low risk trade. Everything else is considered a medium risk or whatnot. So I've not generated an app for the oil at all because if it's medium risk, there's no point in looking at it. The Canadian one I looked at, it still involves the Canadian oil price, but this is what it involves. So if the ISM has a PMI of 52.6%, which was announced, I think, earlier today, again, news driven, we expect manufacturing expansion support where the Fed will have a position of a higher for longer stance with the interest rate. We've also got the new chairman, this Warsh guy. That's going to signal back to the market. We have a hawkish Fed and a historical hawkish policy view supporting the dollar. If you've not seen, the dollar has risen, so a lot of these projections are somewhat true in the early short term activity as of today alone. Let me see if I could find that for you. If you go into Finance Yahoo and you look at the price of, let's say, uh, DXY, yeah, right here. As of today, again, February 2nd, um, as we load up this chart, here's a chart. So it's short term. You can see it's already gone up earlier today since 8:51. So that trade, you could have made money if you took advantage of it. Again, even on a 5-day analysis, you can see here from 95 to 97 cents. But if you're trading with leverage, with a potential strategy that looks good, namely, as I said, with this one, if you knew about it and able to kind of predict it, you would have made a bit of money there, quite a bit. So this one, if you took advantage of it, this is the Canadian dollar here. I'm sorry, the DXY. Um, as this is hinting at a stronger dollar, you would have done all right. And again, we have the again news driven. You came key stocks for the next few days. Will create volatility. Okay, expected volatility, and over the next 3 to 6 months, we expect a expiration and sweet spot for these new upcoming OPEC cuts. So the point here, and the time horizon of 3 to 6 with a 18 to 22% return, very nice sharp ratio, 18, and a very low risk on the max drawdown. Nice win ratio right there. And even on the Canadian dollar, we have a win ratio of 70%, which are all looking great. But again, this is AI projecting this. So what's your next best is to actually test it. So here, let me show you the last app here in the Streamlit. So let me run that and do the data the back test for you. So if I load this one, um, again, overall to create these little apps didn't take very long, maybe an hour and a half. So if you're willing to pair and invest that amount of time on each trading day, you may have able to have trading, call it Python scripts ready to go to trade out those environments based upon already automated back tested data, recent back tested data as well. So here, again, the USD call spread, Canadian call spread, this is holding 6 to 10 weeks. But coming back to what I just said, if you have scripts that are running and they're consistently profitable each and every day, just keep them running. And then as long as it's driving profit as it's running, there's no point in deactivating or turning off the strategy. And that can be live traded with Rhythmic against this server that I've talked about in the past, um, and run it as is. And just keep running only those automated strategies as well. And you can see here, I'm kind of replacing the .NET C# clients and putting in now these Python scripts, all because they're just faster to develop because of AI and be able to have a faster response time as well. So that's why I'm doing this. Okay, so we've got the 6C Canadian dollar set up using hourly. Let me pull up the data here. Hopefully this will run. Okay. So again, let's pull up the right folder here. Okay, this is right here, the hourly data for Canadian dollar, hourly. And then it's loaded up This is how many bars it's loading up. 12,200, 422. And you see how fast this is. So there's a button here. I just push. Where's the run back test? So here's the back test. Run it. And you can see, as I said, traditionally, a lot of people would spend a lot of weeks on end trying to tweak their code with the back testing. And you can see here how fast it is. It's literally minutes. And not just the back test, but able to test against real market data and then do a walk forward test. And then if you're happy with it, just push another button. You're ready to connect into uh, Rhythmic and be able to live trade it. I mean, this is how advanced we're getting. Okay, so you can see here with the Canadian dollar, as I said, this is one of the better looking uh, historical portfolio metrics. Total return 9.65. That's pretty good. A very low Sharpe ratio, max drawdown, win ratio is fairly low, but from what I'm seeing, that's pretty good. Now, remember, this is all based upon news as of today. So all the back testing might be irrelevant. What's more important is the walk forward. Okay. So I'm just showing you just the abilities of this process. So if I do a walk forward, let's see what happens here. So just launched it. Same data set, everything's the same. But what really matters is this walk forward. Let's see what happens here. Using the automatically generated strategy code with this. So okay, so here we go. I'm still trying to understand the 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 meaning of what this is over a period of 3 with a return of 10, and that's on a future period. Um, so we got right here Sharpe ratio return projected 9.5%, but it doesn't give me anything further. Okay, so again, I'm not sure how to take this, but if I push this out for 10 days, let's see what this does. So I'm not sure how to interpret that, but this is one of the better looking out of the 8 strategies of I'm looking at here. So this may take longer, and we are dealing with over 12,000 bars. Uh, so again, if you're happy with the setup, you can always connect into the Redis and have it run, and then the strategy will send all the messaging the um, out to the out to ultimately Rhythmic and be able to trade the strategy here. So you can see what this means now. Okay, this makes sense now. So we're dealing with projected number of days. So this is pretty strong, actually. Based upon the data, what it's saying is we could get an 8 to 10% return each day on this strategy. Now, I'm not going to sit here and project that, obviously, but it's pretty impressive. So here, this would be live. This was connected into my Rhythmic, ultimately into Rhythmic and Redis and all that. Here's all the local messaging channels that would be set up, and potentially active orders once it's launched. Um, so this is looking pretty strong on this particular strategy. And what does that involve? Because everyone's going to ask the details on it. So what this would have been is this strategy here. Okay. So yeah, so I've already given the information here. Um, so it's looking from a walk forward basis, it's looking pretty good out of all of them. And max drawdown 8% is pretty tolerable to take that risk. So if I was to move forward with this, I'd probably set this up, um, connect into my Redis, and then ultimately through a server, and then boom, I'm on accessible to the Rhythmic data and market orders, and that's it. And you watch it every day, and if it's trading every day, projected and stays profitable, then we're good to go. So that's the next step to go. But I just want to show you the workflow of all of these strategies, let alone to put together a trading plan built around this. It's pretty strong. So as I said, right here are the best ranked strategies. based around this. So we have again, if you want to break it down further, we have precious metal. We've also, which I've not talked about, is a palladium platinum call spread as well. We've got also energy, which natural gas, which I didn't pursue. That's a high risk trade, if you ask me. Crude oil, which I didn't really build anything. European gas. So again, this is trading off of ICE with Dutch TTF natural gas. Um, Win ratio not too good. Uh, Again, that's why it's not ranked. Again, we have currencies if you wanted to trade. Again, with the Japanese yen risk reversal, this one looks good for Canadian dollar, Australian Canadian dollar cross currency spread as well. Not as strong as the projected return with the Canadian dollar alone on the bull spread there. As said, this does not appeal as much, but it's got a strong win ratio. But this one's at 70%. That's a max drawdown of negative 10%. So this is a better trade, to be honest. This one right here, the Canadian dollar. For the equity indices, so we have a VIX put selling on elevated levels. Again, because it does predict there will be whipsaw equity markets for both the Dow, S&P, NASDAQ. Compounding the volatility. Here it's presenting a VIX historical mean reversion. Risk is kind of there because of the metal meltdown. Team structure, 2 to 4 week time horizon. We have here the index dispersion trade. Win ratio at 65%. This one's still fairly higher. Um, Sharp ratio at 1.6, 1.7. Max drawdown is not so high on the index dispersion. But when you look at just the current state of where everything is, there is no dispersion for today at all because everything's moving together. So that might be a trade that may not happen. We also have here a likelihood, potentially long term, 68% return, Sharpe ratio, 18 to 25% return, higher drawdown built around critical minerals, ETFs. So this is the counter China supply, chain diversification, EU struggling creates US advantage. So again, you can see here we can trade on recent news. Just for people that don't know, there's a $12 billion project vault uh, for mineral stockpile. Again, $10 billion IM bank financing creates demand floor. So that's the story there. Also, I've shown forex swap trades. It's crazy what this can do. But now we have the ability not just to do an automatic back test, but to be able to do which one's going to perform best. And on top of that, as I said, be able to use that same data and do a walk forward. And that's going to happen, but potentially generate 10% returns in this case over the next 9 days. As I said, and we have also here all of the different parameters we can play with on the walk forward. And again, the proposed depth market. So leave it at that. Thanks for watching. And as I said, if you want to know more, I can't stress on to take this options and futures course if you want to really protect your downside and reap unlimited profit with these asset classes. This is what institutions do. Top that, just get on our email list by clicking on the Learn tab at quantlabsnet.com. Thanks for watching.